Check it out, guys. I could sure get used to this, man. We have all the indexes up big time right now after we got the October CPI data this morning, which you guessed it is exactly what we're going to be talking about in this video. We're going to run through the data, how the stock market's reacting, my thoughts. Of course, we'll break down some individual stocks as well. So if y'all find value, hit that like button, make sure to subscribe. And guys, don't forget to follow me on X. Come on, what are you waiting for? Use that link down below or just go on there, type in Stas Talk Stocks, you'll find me. And with that being said, guys, cheers. Let's dive right into the video and break down what the heck is going on. So it's currently about 1:15, 1:20 p.m. on the East Coast, and we have all the indexes up, and I mean up big time, guys. We have the S&P 500 up 1.9%. The Nasdaq's up, let's see, about 2.1%. The Dow's up about 1.4%. And are you guys ready for this? The Russell's up not 1, not 2, not even 3 or 4, but almost 5% on the day, which is just nuts. The VIX is down 4.3%. And we have the metals up as well. You heard that right. The metals are up as well. Gold's up 0.8, and we have silver up 3.5%. So everything is going bananas right now, guys, completely breaking out. And if we pull up the 4-hour chart quickly here on SPY, you can now see officially we're above, well, we've been above the moving averages now, but we're officially breaking above the highs now from the beginning of October. And now we're gunning for the highs from, when was this? Back in September? Yeah, early September, end of August, mid-September, where we hit about 450 on SPY. That's where it looks like we're heading right now. And if that were to break on SPY, guys, this could be going right back to the highs that we saw a couple of months ago, which we hit, you all probably know, $460 per share. That was in the beginning of August. So SPY's breaking out, Triple Q's breaking out. Of course, the Russell's crushing it, which we'll talk about here in a second. Triple Q's now just $2 away from the recent highs. You heard that right, guys. We hit 387.98 back in the middle of July. Then we pulled back to about 342. All right, that was about a 12% pullback. Got into a correction territory, and now in just the past couple of weeks, we've ran up a lot. We're talking 12%. And again, now we're about $3 away from those recent highs. And we have the Russell up, let's see here, guys, 5% almost, which is just nuts. I mean, this is insane. It's not fully breaking out yet by any means, but we are well off the lows now. We hit about 1630 back in the end of October, about 2 weeks ago. Now we're at 1785. We're up 9.5% off the lows, which is great. And we are approaching the 180 SMA here on the 4-hour chart, right around 1800, 1830. So we'll see what it does at that point, and that's actually a big resistance point from a couple of weeks ago, also from back in the early days of April. So keep your eyes on this 1800, 1830 mark on the Russell. So before we get too carried away here on these charts, guys, let me pull up the actual release here, the data, what ended up going on with the CPI. Let's break that down. But actually, first, let's take a look here at the 10-year Treasury yield, guys, which got completely destroyed this morning as the CPI data came out. Literally, once the data came out, this went from 4.61. I think yesterday it was hovering at 4.64. We went right from 4.61 all the way down to about 4.43-ish. So we did drop a good chunk. We're down about 17, I guess 0.17 right now, 17 basis points, which is a big drop. And overall, over the past couple of days, the 10-year has actually done pretty well. It consolidated a bit at 4.63, 4.6 over the past couple of days, but now we've actually, again, collapsed, erasing all the gains on the 10-year. And on the month now, you guys can see it's been pulling back, of course, as the stock market has been doing very well. These are, moving inverse to each other. So enough of that. Let's pull up this inflation report and see what's going on here with the data that we just got from October. So you guys can see the CPI was unchanged in October on a seasonally adjusted basis after increasing 0.4% in September, according to the U.S. Bureau of Labor Statistics. And over the last 12 months, the all items index increased 3.2% before the seasonal adjustment. Of course, with the the core CPI data, or the number, which excludes food and energy, that rose 0.2% in October after rising 0.3% in September, which that's good. It's actually cooling off, which is awesome. And I think annualized, that number was, let's see here, guys. 4% over the last 12 months. Its smallest 12-month change since the period ending in September 2021. That's right. I think this was the lowest number in over 2 years, which is really good. And you guys can see this bar graph right here. This shows you the 1 month percent change in CPI for all urban consumers, seasonally adjusted from October 2022 to October 2023, which you guys can see. It's heading in the right direction, which is down, not a crazy down move, that is, but we have decreased over the last couple of months, which is great. And this shows you here a line graph, which the blue line here is the all items index, and the red one is the all items less food and energy, which is core CPI. Both of those are downtrending as well. And quickly here, guys, let's look at the different categories to see where we're declining, where we're increasing when it comes to inflation month over month. Let's see, guys. So we can see here the all items index was at 0.4% on the month of September. We just dropped to 0 in October, so that's a huge drop there. Again, that's 3.2% annualized. And let's see any noticeable categories here that are jumping out at me. We have food pretty much at the same it was in September. In October it was 0.3%. September it was 0.2%, so it increased a little bit there month over month. That's food in general. Food at home increased from 0.1 in September to 0.3 in October, so that increased a bit, but food away from home ended up staying the same at 0.4% month over month there, and that's 5.4% annualized. In energy, let me see here, guys. Energy declined. It was negative 2.5% in October, which it was an increase of 1.5% in September. That's good. It looks like energy commodities declined as well. Gasoline, fuel oil, all of those have come down. I'm sure you guys have realized that the price of gas, I'm not sure where you live. Let me know in the comments where you live, what state you're at. And that is if you're in the United States. But here in New Jersey, where I'm at, I think gas got almost to $4 a gallon at one point recently. Actually, I forget exactly when that was, but now it's at $3.09, 10 cents for regular, which has come down a good amount, which is awesome. So we're noticing that in the fuel markets, right? In the fuel oil, energy in general, right? So we have, let's see, electricity services unchanged. Looks like utility gas service that did raise or increase a bit from negative 1.9 in September to 1.2 in October. Let me see here, guys, a little bit about these new vehicles. New vehicles decreased. All right, that's good. It was 0.3% in September, negative 0.1% in October, which is great. Used cars and trucks was negative 2.5% in September. Now it was negative 0.8% in October. Annualized, that's negative 7.1%, so that's good. And anything else notable here? Apparel, nothing much there. I guess it did increase. It increased a bit there, but nothing too noticeable. So, yeah, man, overall, yeah, it looks like we are seeing a drop-off in inflation month over month, but we're still a ways away, not to be a Debbie Downer, but we're still a ways away from that 2% annual, or not annual, well, I guess it is annual, but that 2% target that the Federal Reserve has. We're still a ways away from that. And for it to get down to 2%, we might need a couple more reports. Probably a lot more than just a couple, guys. Let's be honest. But as of now, inflation's coming down, which is great. That's crushing the 10-year Treasury yield. Stocks are going ballistic. The Russell's up 5%. Small caps are through the roof. It's just one of those days, guys. This is getting insane. And again, like I said before, SPY's approaching 450. We have Triple Q approaching a big spot here, which is the recent high from a couple months ago. We're about $2 away from that, and a lot of individual stocks are going through the roof right now. We have Enphase up a lot, EMPH, at least on my watch list, that is. This is up 16%. Virgin Galactic's up around 10%, which now is actually taking out the highs from recently, which is great. You guys remember they reported earnings, stock ripped, pulled back a bit on, I think, Wednesday, Thursday, or Monday, Friday, Monday, excuse me, guys. Now it's Tuesday, and we're ripping up past the highs from, I think, Wednesday or Thursday. Either way, this is good for momentum for the bulls. And when it comes to some big cap or large cap names, let me look at those quickly. We have Apple up about 1.4%. This looks like it is starting to reverse on the 4-hour chart, which is great. We're breaking above that channel. We're above the moving averages. We have other big tech names like Google up 2% on the day, which this looks like the dip was bought. Looks like we're running back to the top of that channel. Amazon up 2.7% on the day, which is awesome. And to be honest, guys, this looks like it's on the verge of breaking out on the larger time frames. If I pull the 3-year chart up, you guys can see an inverse head and shoulders and a cup and handle here, however you want to categorize it. And we have a big resistance at 145.46, which is where we are now. That's a big spot that if we break, man, there could be a lot more upside. So Amazon is looking pretty good. What else? Meta is up on the day 2.2%. Microsoft is up around 1%, which this is at the highs already on the 4-hour chart, which is nuts. So yeah, stocks are crushing it, guys. CPI's out. It was better than expected, and the markets are loving it. The 10 years down, stocks are up. I mean, this is an equity investor's, what's it called here? This is an equity investor's happiest day, or one of the happiest days that we've seen in the past month or the past couple of weeks in recent memories, right? So what do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe here on YouTube. It helps me out overall in the algorithm. And don't forget to follow me on X as well, at Stocks Talk Stocks. You might as well. It's linked down below. And if you want some free stocks from Moomoo, the sponsor of today's video, why not? Use that link down below, or simply go to stocksurfs.com/Moomoo. Once you open up your account and fund it with your initial $100 deposit, you get 5 stocks right off the bat, each of which could be valued up to $2,000. And on top of that, you get a free share of SoFi stock as well, again with just a $100 deposit, and fund your account with at least $1,000 on top of those 6 stocks you already got. You also get 10 more stocks, and each of those could be valued up to $2,000 as well. So use that link down below to get your 16 stocks for Moomoo. And of course, that is an affiliate link. It helps out the channel. I appreciate you guys as always. And with that being said, cheers. I'll catch you all in the next video.